So with it being Monday, no news, typically the days that are a little bit shorter. If we can get a nice little ends model, we'll just call it there for the day. Not really expecting too much. Let's go to a higher time frame real quick. Okay, so inside the daily, I kind of would like to see this little sell side get cleared here. Let's clear this, let's clear some of this. Okay, short term high cleared, hold that. Did we get into the 4 hour? We did, just barely. Okay, institutional order flow. So I'll actually be interested to see if we're going to leave a 4 hour fair value gap here. That stays open. I'd like to see sell side. Displacement. Short term high cleared once. Fall through. Okay. So actually, if we are going to attack sell side, ideally we don't come for this high yet. We can come for these highs, but I'd like to try to see this potential higher time frame fair value gap hold. So maybe one of these two fair value gaps in here on a 5 minute, it's a 15 minute as well. Maybe this as last line of defense. So look for price to trade into that and then look for a short off that. Okay. Well, let's see what we get. Already you could tell, pretty fickle, right? Just the candlesticks will tell you the story themselves. Not much volume. Pretty choppy, a lot of volume bounces. So as you said, we won't really stick around too long if we get a good setup. Let's see what right at 8:30, so yeah, we'll see. As we said, I wouldn't mind picking up this short-term high if we wanted to. We got the 4 hour, 1 hour, okay. So up first isn't bad. That's what we want to see. New day opening gap here. We've already filled in midpoint of the opening range. Honestly, that may be all we even want to do here. If we break down from here, we might just run straight forward. We'll look to see if yesterday's low gets closed below. If we do, I expect we'll just keep running from that point. New opening gap, new day opening gap, opening range. We cleared the short-term low. That's what we're holding now. So we want to see if we can actually hold that in the short term. If we're going to try to leave these lows for later, we'd want to actually keep this liquidity and this short-term low for the time being. Then run out those equal highs as we mentioned. Revisit the 1 hour. Might need to come up into the 15 of the 5 as well. But once we do engage that liquidity, still would favor that run lower. So we're expecting a bullish run off the opening. But eventually we want to try to catch something that will sell back off. For us, we'll probably wait until we either get into... Well, first we're going to want to see how we react once we clear that high. But if we keep pushing, we'll wait for like the 15 minute or this 15 minute that we had marked out up here. 5. All right. So far, slow opening, not surprising. Take a look at NQ real quick. So first, we have a fair value gap in NQ. We expected bullishness, so we'd want that to hold. No fair value gap in ES. We could actually use the implied fair value gap. So you're going to take a midpoint of the 2 wicks that have immediately rebalanced. The space in between those will be classified as a fair value gap, implied fair value gap. So when we don't have true fair value gaps in one of the indices, you can use that. Look how we're respecting that level so far there. So we'll watch this as our kind of implied fair value gap in ES. True fair value gap in NQ. Should see both continue to push. Cool. Nice, nice. Okay, so there's the short-term high. I like that. That fair value gap held nicely. $830 level was in that. So yeah, at this point, we're going to look and see if we don't want to come up into the 15. NQ leading the way so far. A little more bullish. First presented potentially. Yep, first presented there in NQ. If we leave this fair value gap here in ES, that may be actually a pretty good opportunity early on to try to get us into the 15. That's going to be the objective. So as we close above this old first presented in here, I do want to see if we're going to leave. Notice the new day opening gaps right there. So if we leave that fair value gap, that's going to be the new day opening gap perfectly. We would expect something like that to hold price. First presented here in NQ aligned with new week opening gap, daily open. So if we leave that fair value gap in both, we want to see that be respected. And at that point, we could look for the 15-minute, the expansion up into that. We're going to have a short-term high here. I expect we'll at least want to run that. So we'll look for that first. We are at the high of the opening range. So we did get the closure above. So as we leave that fair value gap and close above, that's why I would expect something like this to try to hold price. Same idea here. We want to see this try to hold price in ES as well. Oh, we might just pump. Okay. Slight difference there. Right. ES now leading the way. As we said, there's that buy side, so we figure that will at least be an easy target. Then we're going to look for the 15-minute up here. There's a first presented. So as we said, we'll see if we get above opening range again now that we traded into that. We fall through that, we fall through this, then we'll start looking for the bearishness. Wanted to see higher time frame, but as we said, when we get the buy side, that's kind of all we would need to get. Falling just short of this buy side, however, a little bit fishy. I do think we'll try to get that high as least as well now. So let's give that a second and see what we get. If we invert that, we'll look for the sell-off. Oh, excuse me. See an NQ. If we do get above that, what could we reach for? We do have this inefficiency up here. So that's not a bad idea. Okay. So a few different objectives. We'll see if we can go bullish still. I wouldn't mind one more bullish move because then we can get a little 3 drives off of this implied fair value gap. Oh, might still get like a 1, 2, third drive into buy side, into the 15. NQ gets up here, third drive as well, and then look for the breakdown. Would be ideal. We said if we invert that, we'll look for already maybe this retest here, this fair value gap, midpoint. New week opening gap here. We get closure below. We did, okay. So closure below, we'll see if this gets negated, but already this may be an inversion level. We did hold the actual first presented here, but got below new week opening gap. So at this point, we're still watching to see, are we going to start respecting the premiums? We would want to see this inversion try to hold, but with this candle here, we might see that quick bullish move. Right, low still protected. So if lows are still being protected, we could look for a high one more time. Wouldn't be surprised to see that. That's the high of the opening range still. So as we said, one candle chance negates. We'll see if we close above. We didn't get closure above, so we could still retest first presented. From here, we'll see if we get below that or we want to actually push. Closing below, closing right back above. As we often say, that's going to be bullish. So flip it for bearishness, but just that signature in general. When we have a level that we're looking, we close below it, we then displace back above it. Oftentimes we'll try to continue in that direction. So we'll see if that's going to be the case here, especially if this volume imbalance stays open here or in ES as well. If we do both of those, we'll actually look, as we said, for the 15. Fell just short of the high, so no SMT or anything, still in the same spot. Rejection block here. Closed it in, so not much to do. If you want to do like a risk entry, K, right? As we said, Monday, no news. We call these risks because there's not much confirmation. You're just trusting your bias. Really, this should hold. I would expect this to hold. I would expect this to hold. Give us one more pump up either way. So it'd be like a close proximity entry. You're just buying that right there. Stop below this low to target up here, using the first presented as the entry. Excuse me. A little choppy. Yeah, I'd like to see the quick bullish move here. Let's see, rejection block holds. All right, high holds. So we'll see if we break down. For us to go bearish, I just really wanted to see this buy side at least. Okay, hold up. What do we have here? Volume imbalance. We'd really have to see a break in structure. So we'll wait and see if this implied fair value gap gives way. We retested the original fair value gap in NQ, so we're going to watch what that does as well, now that we've picked up the low as well. So the first time we come into it, we don't get midpoint. We leave a short-term low above that. Now that we've cleared the short-term low, we hit midpoint. So at this point, if we do close above, I still would expect the bullishness, which is why we're saying if we can close below, that may set into motion that bearishness that we're trying to see now. Looking to see if we get back below the opening range low, this level here. At that point, notice the bearish fair value gap created aligned with previous first presented. That is what we would want to hold. Closure below the low. Unfortunately, no closure below the opening range. We'll still watch here. First presented. Ideally, closure below opening range as well before retracement into first presented. Gives us a little bit added confirmation. A willingness to leave that range first and then give the retracement. Holding that, we could run into that choppiness to where we just hold the range, accelerate back above. So we're waiting to see. Yeah, let's see if we get below that. Pretty much need to close below this candlestick's open here. At this point, we could use this implied fair value gap as a potential inversion. NQ did not close below, instead closes perfectly on it. Midpoint was closed below, however, so now we're going to watch midpoint. See, does that hold the body lower? If it does, and now we immediately rebalance, we can expect the bearishness to continue. We're going to leave this first presented. We do. Okay. So as we come into it for the first time, that's valid. If you want to short for me, I'm leaving it. Just because I don't like that we couldn't leave the opening range low. So if we're going to be stuck range bound, first presented here will get traded through. And we'll probably retest this buy side. If we can hold this close below first or the opening range here, I'd look for another retracement into first presented to short then, because I don't think it'd be like a one tap runaway type of thing. In my mind, if we're going to stay choppy, it'll give us a multiple retest of that level. Interesting here. Okay. So a little bit mixed. NQ holds its midpoint. So NQ showing a little bit more bearishness. 1 minute sense. Well, ES, as we said, is trying to get above. So we didn't close above, but same idea. We close above the midpoint. Opened with the volume imbalance. That's right on the high. So like if we leave that there, I like that for longs more than I did the shorts. And we'll look for that buy side that we didn't engage. If we don't come for it right away. If we do go for it and then the 15, my idea would still go back to the lows, right? So we're kind of having a fluid little bias today, depending on which side of the market's getting taken out here. That's the midpoint of the opening range. We'll see if we get above that. Retest first presented more than likely. See if we get this buy side here in ES that we wanted to see, right? We left the relative equal highs. That's sketchy. That should now be a nice long opportunity. Really, this low should be held. We'll try this first. So I like that displacement. We do have equal lows here, right? But this is kind of a scenario where we would expect the buy side first. So if we just run into this right away, or here, we'll leave this entry. Cancel it anyways, if we get into that 15. There's buy side. After buy side, we can expect a retracement. As we said, if we go straight into the 15, we're going to move that, because at that point, if we're going to retrace off this 15, we would actually expect the sell side to be targeted, these equal lows. So we wouldn't trust that as a setup anymore. Clear the short-term lows. We perfectly deliver into the low of the fair value gap. Displacement candle back above. We now watch, right? The high of this should be the most sensitive area, should hold price. especially because this candle created a wick to the upside. So now you have a wick paired with the displacement. So right, we'd want to see pretty much this hold, closure above as well, indicating a willingness to continue bullish. That's why we like the 15 up here. This fair value gap might be all price tries to return into, so we may miss the entry regardless. That's fine. Oh, you two. Hey, relax. Speed racing. Okay. So far, both bullish in my eyes. ES just a little bit stronger. That's fine. I would expect this to be more six sister. So NQ hold this fair value gap to catch up to this high that we cleared in ES. As ES continues to push, right? If we still have more room to the upside, that should allow NQ to try to catch up here. As we said though, 15-minute, this entry, toast. We wanted to see pretty much an immediate retracement. Should be met here soon. And, oh. Wait for it. And... $5, $15, $15. What else we got in here? Hourly. Hourly midpoint holding us at this point. As we said, we expect that to get traded through. NQ pretty much following suit. We said as we displace above that, that fair value gap should hold, create another bullish push. We'll see if we want to get above the opening range. Expectation is we should hold. If we're going to close above this first presented, we'll probably try to hold that in the short term right away. So once again, look for like an immediate retracement followed by a quick bullish move by a bullish candle is what the expectation would be. There's the 15 for us. That means entry is gone. So the right idea, just didn't get the retracement. As we said, we don't trust the shorts from this first presented because we are unable to close below the opening range. That would become the trigger to trust the shorts, especially falling short of that buy side. So this to me was a bait. That's why, right, we create those equal lows and then we run against those to target the buy side. So it's not random, right? It's not the concept's not working. It's simply we're leaving that for a later time. Now here will be interesting. So that's pretty much the objective. I would like to have actually see us dig into that a little bit. Right now we have perfect delivery into the low. That may be all price needs to do with us clearing this buy side as well. And don't forget there is a lot of fair value gaps in here. Right, so we're already hitting a 15 and a 5, and we're already inside the 1 as well. So the 15 up here was kind of just like the highest point I'd like to see. But at this point, we've got to start paying attention to where if we do break down, first kind of thing for me would be inverting this fair value gap, leaving the volume imbalance open. Right, so that'll be first kind of step to showing us we may want to start going bearish if we leave this bearish volume imbalance here. Then we'll see if we can actually invert. And then our attention would go towards the recently equal lows that we just created. Right, so we're engineering that liquidity to target on the way back down after attacking the buy side and delivering into a higher time frame inefficiency. Look for the inversion play. Volume imbalance will remain open. NQ actually holds as it's first presented. That's a pretty strong signature as well. Closing above it, immediately closing back below. That leads to that bearish movement. So we should see us actually catch up. Nice. SMT at those highs. Oh, right into it. Wow. I can say if we can leave this inefficiency, we'll use that fair value gap. But that's perfect equal lows. No, that's sketch. We should hit those as well. First percentage here. Okay, so equal lows, retracement into this inefficiency. At this point, we want to see these lows cleared. We want to see previous day's low once again cleared as well. Relative equal lows in here. Notice how we have still yet to close outside of the opening range. Seeing this, however, though, I would be a lot more willing to now trust this. First presented may get traded through, but this bearish one up here should hold. So that's what we would want to see hold if we're going to do anything. What would that stop be for this high? It's a little large. If we went midpoint, we might miss the entry. I like previous day's low. All right, let's see. Equal lows, we'll look for a quick spike up into this. If we leave this fair value gap though, right, so this candlestick just closed with the volume balance, now is kind of when we may actually just use that. So this may not get returned into. We're looking for choppiness, so we're looking for more of a consolidation profile, which means we'll give a deeper retracement. If we want to run bearish now though, we'll probably just tap this volume balance, reach into this little fair value gap quickly, and then break right for that sell side. To be honest, if we don't get into yesterday's low, I'll still leave this for the time being. See if we can't hold that fair value gap. So as we said, there's that retracement. I would almost expect this to try to hold price from here, the first presented of the day, paired with the most recent bearish fair value gap. If we can get through that up into the original inversion and the bearish fair value gap up here, that's what we'll look to enter short. So in a little bit more of a premium understanding, we may miss it if price wants to hold all of these areas in here. First presented, old first presented. Mango, get down. Closure below this fair value gap, we would expect this to be the high, as we had mentioned there. So I want to see it here, but with how close we were to the equal lows, it makes sense if it first presented to hold now. Especially because we opened with the bullish volume balance that has no wick to the upside, very bearish. Closure below that fair value gap, as we said, we would expect fair value gap below to now offer that resistance. If we can stay inside the fair value gap, still have a chance of coming up here. Closure below, so okay. So at this point, yeah, I'd expect almost this fair value gap here, paired with first presented, to be the most sensitive area. If we're going to wick up into that, we'll probably see a quick wick and then a quick stab into all of these equal lows. 3 equal lows here. And Q, we're holding inside a bearish fair value gap. That's also new week opening gap. So same area we would expect. As we said, once we tap that now, that is the most sensitive area. We would expect the low to offer a quick sell-off into the equal lows. It tried to. Instead creates a failure swing there. Still not convinced. At this point, either way, I like the shorts, right? So we're going to keep the shorts on until we get into previous day's low. Or until we're proven wrong and we run all the way back up for this high. If that's the case, that's just very sloppy delivery, right? Leaving the equal lows, attacking buy side multiple times. Monday, no news. Classic days. Matter of fact, I just realized that this week is probably going to be very choppy in the mornings. Jackson Hole Symposium. Okay. Yep. All right. So yeah, with that, we actually will expect choppiness most of the week. So far, playing out as we would expect there. So we're going to look for the sell side coming off of first presented. If we can hold these equal lows, I wouldn't mind that. We did. Wow. Hold that. Give a quick stab up into this fair value gap here. Closure below the opening range, however, so after seeing that and seeing this volume imbalance, I don't think we're going to get that retracement. Still going to leave it there until we said, or until we get to previous day's low. We could run these short-term equal lows, even this low, give the retracement then, and then fall. Because yeah, from here to here just was not worth, that's not enough. But we understand why certain fair value gaps don't get traded into, if that makes sense. Right, so when we have all of these, first of all, opening range, first presenteds, bearish fair value gap, old first presented, it makes sense that that would be the area that holds price. Then we get that delivery into previous day's low there. So another missed one. Right, we could have used the actual first presented. Stop would have just been too large for my liking. It would have had to at least been above the volume imbalance. We can understand that this may be a breakaway, but it's still nestled inside, so it's not really worth having it that tight. So for us, the risk reward just wasn't there. So we just follow it. Right. Plays out as we like, not involved, happens. No issues with that. Simply in tune with the market. Okay, so from here, let's go back to the higher time frame. We originally had this sell side 1-4, so a few higher time frame inefficiencies in here. I don't know if we want to stay that bearish, to be honest. We'll see. Let's see how we react around previous day's low. In Q, a little bit weaker. Previous day's low should be met in there as well. We close below that, then we could actually look for this low. Right, we'll look to see if we can't keep engaging some of these lows that we have. So like here. And here, and here. A few more sell side pulls. That volume imbalance as we break through the lows has my interest. So as we're going to come back up into opening range, I want to see if that's going to hold now. Right, we've left the opening range. So first of all, we open up. We trade above it. Respect the low. Attack the buy side. If we're going to now close below that, I want to see if that can hold bearish. So what we would actually look for to see is, let's see, inefficiency in here. The volume imbalance ideally would hold price, so we would wick into this, but we should see bodies try to respect this here. So that's what we're looking at. Do we get the wick into the opening range followed by the respect at the volume imbalance? If not, we can allow here. If we come all the way back up into here, I almost would expect to try to attack the highs again, actually. So more seek and destroy rather than a retracement and a continuation. Look at that closure right above. Notice how the very next candle opens inside of that. So this candle can negate this candle's actions. So got to give this candle time to print. Right, if this candle closes bearish again, that's still fine. We're still going to be looking for bearishness. If we close bullish twice after respecting that volume imbalance, then the fair value gaps will become more objective. Nice, okay, pretty bullish. So far it looks like we want to seek and destroy, so if that's the case, previous day's high, perfectly met. Previous day's low anyways. We could almost use the low of the opening range, right? That's going to be a sensitive area. If this low truly is the protected low, it'll use the low of that opening range as support to get up into this inefficiency. This is a little bit more counter trend, higher risk entry. I'm just debating if we want to try. We actually got above 830 as well. I kind of like that. See if we can't hold it. See, now get us into that fair value gap that we left as a breakaway originally before attacking the sell side. Here in NQ, we're back at that new week opening gap. So it holds us originally, sends us into liquidity. We get above that. We'll expect bullishness from there as well. So either way, we're looking for a bullish run here. We did not hold the volume imbalance. Okay. So yeah, we'll just take read that. I like the low trying to hold though. But if we are going to start delivering bearish, highs will be protected. Ooh, did not give the retracement. That's fun. So let's see if we invert first presented. Right, there's that fair value gap we wanted to see. At this point though, we're going a little bit more bullish. Closure above that. Inside of this fair value gap, we would look for the high. As we said, when we first deliver into the 15, I mean, that high is just a little too perfect in my opinion. Right at the low of the 15. That was good to see originally, because then we want to see the bearishness. But now that our sell side objectives has been met, we're expecting that seek and destroy, so that becomes the next target now. This buy side up here. So look for a return into the 15 while clearing some liquidity. What we'll look for, let's see if we leave an inefficiency here inside of the first presented. We close above it originally. We always like to have two candles to confirm that. So if this candle can actually close above as well, that'll leave a fair value gap here too. We could try to use that bullish breaker, right? Low, high, lower, low. Displace it above. Up close candle here becomes the bullish breaker. That's paired perfectly with midpoint and the fair value gap. Original fair value gap that was created. Right, so a lot going on in here. Let's try that out and look for the bullishness here. Just something light. Same fair value up in NQ. So I like that for both. We should hold those. Try to get out at the midpoint. We'll take one off if we can get up there. If we get entered, we'll take the first one off here. Okay. Now we wait. 10 o'clock, so we'll probably just call it here, regardless of what happens. If it works out or if it doesn't. We would expect hesitation inside of this. It'll act as a speed bump. But if we want to go bullish, eventually it'll get traded through. So what I would like to see is for this to actually offer hesitation, put in some type of swing high, retrace into entry, then displace through the swing high and get above this inefficiency. That'd be like the best type of delivery to see. Because then it would give you an opportunity to actually stack a position as well if it did something like that. Midpoint is where I'd ideally like to see that high be put into place. Okay. So as we said, that's the swing high there. Wouldn't mind that. right at midpoint of the bearish, then run into entry, and then look for the expansion. Pretty much this hourly candlestick, we would just want to stay extremely bullish. So we opened up down, where was the open even at? Oof. No wick to the downside. So yeah, if we do run this high, I almost would expect the seek and destroy to continue, and we come back for this low. Where we start this 1 hour candlestick, no wick to the downside at all. And we create equal lows here, anchored to the previous day's low. So we'll look for entry here, run into TP, reversal to target, continuing the seek and destroy. We want this to be the short-term high. Don't want that high to get ran. Now we're holding support at the potential inversion. At this point, it's simply just a premium bearish fair value gap. But because our bias is bullish, we're almost anticipating this to turn into an inversion. I'd like to see us get entered first, ideally. And Q's closed above this fair value gap now. That may hold. Could be a little concern, causing us not to get this entry, but we'll trust it. Okay. So there's entry. Already right away, no swing low. Not a good sign. We would have wanted that to be an immediate wick. And Q gets back below the fair value gap after closing above. Once again, not a good sign either. Already, we're not a fan. For us to feel comfortable, we need to get back above today's first presented, which is here. We close right on the low of that. I don't like that either. So if this can become the swing low and we can reclaim that, that's what we would need to see pretty much. Same here in NQ, right? We would need to try to get back above that fair value gap, but that's pretty bearish. Looking for seek and destroy. We'll see if continuation reigns true when it wants to take a low again. Need to get back above first presented ideally. Close perfectly on, okay. So at this point, this needs to be a swing low. As we said, we create the swing high. That's what we wanted to see. We then want to displace above that swing high. Ideally displacing outside of this. That'll become an inversion. May leave another opportunity for us to stack a position as well. So what we can do is if we can get a partial off. Where we at? 67, so 72, 25 would need to be partial. Okay. So far though, I'm not liking that delivery at all. Nope, yep, that is why. Bearish fair value gap created, coming off of the premium. Retracement into the premium and now holding it after hitting midpoint. Right, so we're respecting this more as a premium. I want to see that be disregarded. I want this to pretty much be low of the current morning session. And for us to try to target now the high. Midpoint holding with the bearish fair value gap. So pretty important flip point here in both ES and NQ. We need to get above this bearish fair value gap. If not, we're going to go bearish. And we'll probably just create a continuation at this point. Attack a low. Leave this and leave the high. Stop loss for us underneath pretty much opening range low, right? That'll be like our last line and this volume imbalance. Ideally though, opening range in 830 is what we want to try to hold price. That's fine for me. That would pretty much need to be the wick though. So like if we're going to create a wick like this, we don't want to see that being traded through now. We trade through that. That's going to become a premium. and it's just not looking too hot for us. So ideally, this becomes a swing low that produces a large up close candle that needs to get above this fair value gap here. This is our issue. So let's move this one. We already held midpoint. At this point, it's this little thing here. Also midpoint of the first presented as well with the bodies, right? So wicks and bodies we're looking at. We need the wick to get above. We need the body to get above. And Q, we want that to be the swing low as well. What we would not want to see either is for this to be a swing low and then for that swing low to be closed below. That's just as bad as seeing it immediately being closed below, because that'll be a market structure shift. Not a fan, not a fan. The longer we get stuck here, the easier it is to fall out of bed. As we often say, elevator down, right? Elevator down. Quick down movements. We don't like to see it be that reactive. Just a brick wall, right? Look at the equal highs there. Right at midpoint, and that's pretty textbook, because as we get into the high of it and close below, midpoint would now be the most sensitive area that price will struggle to get above. And it's like a brick wall right there, while the bodies still hold midpoint of the first presented. And the volume balance here, okay. Yeah, not showing us what we'd like to see in the slightest. Let's say we had more risk. This is where I often talk about cutting risk. So when it's showing things that are going against the bias and we're being allowed to take partials or cut risk, that's when we would. It's only 0.25% trade, so it's not really worth cutting risk. Right? It's already low risk for Monday. But if we had higher risk, 0.5% or 1%, I would cut that, which would allow us to now just hold without taking a stop, but still be able to profit on the run. Just something I always like to do to maintain capital in choppy conditions. So we got above and we closed inside. But, right, notice this candle opens with a bearish volume imbalance, so this can very easily negate this previous candle's actions. So we're not really out the woods yet. If anything, that's probably worse that happened, that we close on the fair value gap and immediately open with a bearish volume imbalance. That's going to be a hard rejection. We need to see price start closing inside of this one. So we just did there, nice. We actually close above, creating this as a little inversion. I also like that. So at this point, we need to get above midpoint. If we can get above midpoint, this should work out. But for the time being, we're right at the high of that first presented. So I'm not liking it too much. We need to hold, really get above midpoint. Try to hold this first presented here. As we said, we don't want this low to be cleared. Anything below this low. We'll look for the deeper retracement now. Getting stuck right at equilibrium. Notice that. So we're not surprised to be consolidating here. Don't want to see first presented give up the body. It did. So this is where I'd want one candle to negate that. I like to see this be a straight bullish candle, no wick to the downside to get back above. Because if we trade up into that, hold it, close bearish, as we said, that's going to be a little bit more bearish. We'll look for this low as NQ holds. NQ couldn't actually get above that fair value gap that we did get above in ES, so NQ still a little bit more weak. Swing low, still holding, so that's nice. As we said, this would need to be pretty much no wick to the downside candle, though. See if we can form that. Beautiful. Okay, that needs to stay bullish though. Ideally close above this candle here. Close above this opening. Cool, beautiful. Okay, I like that. That's perfect. That's exactly what we'd want to see there. And the volume balance perfect right at midpoint as we close above. Okay. So now to confirm this, we need to keep this volume imbalance open, bullish, close another candle above the midpoint, and now close above the swing high. Right, this candle hits the high, so we have equal highs here. We expect those to get tapped, but we don't want that to be a wick. We want that to be a closure. Right, so we're looking for a bullish break, not a short-term high being cleared here. For the time being, that's simply a short-term high being cleared. If we can leave the volume imbalance open, that's why we want to see that, because then we'll actually be closing above the high as well. If not, we'll look for this order block here to hold price. Okay, that's unfortunate. So yep, sloppy, short-term high cleared. Looks like the volume imbalance is going to close in. Need the order block to hold. Does close in. So now this needs to hold here. In reality, we don't want this low to be cleared. We're going to cut risk a little bit. If you're very risk averse, you could go here. This low should be protected, but we have equal lows there. And this volume imbalance, and we're choppy, right? So I'm allowing a little bit more leeway, especially because it's a lower risk entry. Ideally, though, as we say, order block here holds us now. So if we're going to close below the first presented, displace above it, no wick to the downside, and create the order block aligned with it, while closing above midpoint of the bearish volume or the bearish fair value gap here, we want to see this offer us support to actually truly, right, leave this fair value gap now. So we've anchored this discount in the lower quadrant of the premium, right, if that makes sense. So we'd want to see the discount pretty much support, displace, turn the premium into a new discount. Sloppy, sloppy. Looks like we're going to need to retest equilibrium again. Don't forget equilibrium right here. So pretty much what this fair value gap is equilibrium. We just touched it again, equilibrium. So this is kind of where we understand we're in choppiness. We expected choppiness. You have to just really sit inside of it. Unfortunate. But that's why we don't really trade on these type of days. Unless you have the mental capital. So we understand it's going to take place. So we commit to the idea. We're not trying to change the bias back and forth. We expect the high resistance liquidity runs. As we said, right? So now, like, if we still had the large position, 0.5%, there's zero question that I would have closed half of it right there. Multiple times retesting entry. That is one of those things where, just over the years, I learned if that's taking place, the trade is less likely to pan out. Doesn't mean it's not going to, but the probabilities start stacking against us. So I'm very quick to preserve capital. And as we said, if it runs, you still get to profit while taking less of a stop loss if you actually did get stopped out. Win-win. But boring. Let's see what we get. So far, as we said, protected low still holding true. It's nice to see. So even though it's sloppy, we still have these very significant areas in price, key levels that should be respected, and that's what we kind of base our whole idea off of, right? So inside of consolidations, That's why it's important to know which points are really key levels. Okay, so from there, nice closure above. Displacement, I like that a lot. We need to close above that high for the first time, ideally closing above. As we said, we probably should partial if we're going to want to try to add a position. That was 5 handles. So if we can get into, that's fine. Because we're now going to move our stop. So we'll go ahead and partial right there. Our stop now will be right here. Protected low is held. TP partial 1 should be met. We probably should have used the old buy side, right? That's going to be the first objective that's going to hold. Not 5 handles though, so we're going to hold strong for 5 at least. Closure above, that's nice. So at this point we should hold that. If we come back into the order block, we'll buy there with this new tight stop, right? So that'll be pretty much the original stop out. I'm hoping we can at least get a partial first though. Always like the partial before looking to stack. Either partial or move stop. So in this case, because we did move stop, still fine with the partial or with the stack position. But always just like to see us actually get the partial first. Hey, oh, sorry. Hey. Nice fit. Yeah, or one of the cats, I thought it was. Just you.
Just me.
Volume balance here should hold. Perfect. Get me out. Okay. So. I like that, I like that. We might actually just go low-hanging fruit. What time is it? 10, 4? Nah. I like that. We'll use our stop loss as the partial. So if we run into this high, we're going to jam our stop pretty much all the way. That's just really not a good idea. So I take that back. Because oftentimes, especially if we leave this, like if we're going to run into this, we could see price retrace into here. Still hold. So what we'll actually do, we'll take low-hanging fruit on a Monday. We expect midpoint. We don't need to get into midpoint. All right, we're content. We're out. So there we go. There's the morning setup. Patience. Wait for the right setup. There it is. As you said, fluid bias, right? So we kind of were looking for shorts and longs, just regardless of which side was getting interacted with. We wanted shorts early on after we trade into the buy side. That delivers. We don't get the shorts. We don't get the retracement. Next target was previous day low. We trade into that and then reverse again. We understand we're in seek and destroy. So now, right, we flip the bias to longs, and that's what plays out. So pretty much textbook. As we said, high resistance. We're not surprised by that, but the delivery itself, very textbook. We clear the short-term lows. We deliver into a daily level. We then create an inversion at the last premium. We respect that as a discount. We displace above the first presented, leaving a new discount aligned with that. We said we would expect this to act as a speed bump that creates a short-term high that retraces into our entry. That's what we see. We then displace above and close above the swing high. Once we do that, then we get the release and it runs into our objective where we get the swing high exit. Equal highs, but you know, we count it, swing high. No swing low, miss the buy candle, unfortunate. But either way, A+ setup there. Right, bullish breaker, a lot of PD arrays. So remember, bullish breaker, 1 minute bullish fair value gap, original first presented fair value gap, old first presented fair value gap, midpoint of the opening range, 2 minute bullish fair value gap, new week opening gap. So all of that together is what leads us to trust this. And as we said, once you're in, you just have to commit to it because we're already expecting the high resistance. So as we get choppy, we understand that choppiness will send us to the buy side eventually. And as we said, the order block here, anchored inside of today's first presented, did hold. So it gave a little bit deeper retracement, but the mean threshold held well. Then we get the release. And from here, well, we don't need to push for anything more really. We could continue to run, so like this is where you can follow it. Like let's say that we get above the 15, we close above that, we'll look for these highs of retracement into the 4 hour. If we were to start breaking down, I still don't mind all these levels here. No, some sell side, but for the most part, we're content with what we had today. And we'll leave it there. Give it a few minutes in case we have any questions, but if not, that was all. As you said, shorter day on Mondays. Once we get our bread, we're done. No need to keep pushing. NQ, pretty much the same setup as well. So our NQ creates the bullish breaker. It was using, as we said, once we get above that new week opening gap, especially when it holds us like that, those are the easiest ways to find high probability inversions. Is that if it holds you and delivers you into liquidity, as soon as you invert that, those are going to be high probability inversions. Right, especially if it's in direction of our current kind of bias. So that holds nicely. Huge displacement. We actually get above the opening range. So we'll see if we stay bullish in both of these, actually. Let's see. What's the opening range here? I'd rather see like seek and destroy. Nice. That's actually nice. Oh, that's real nice. You can actually buy that. Buy that there. If we're bullish, that'll hold. I just want to see what this wick does. That was pretty aggressive. Seek and destroy, though, I almost expect that, right? So if we're seek and destroy, displacement below that, then you look for the short. And you just keep bouncing back and forth. Yeah, no problem. Yeah, slow market for sure. Slower. Need to be a little bit more precise with it. But still setups. That's the beauty of these things. There will always be an opportunity if you know what to look for. 8:30 inversion fair value. I get pre-open to long. Oh, you were in before the opening. Okay, okay. Let's see what you're talking about. This one. We invert it. You get long here. Boom, boom, boom. Didn't close at 9:49. Oh, no partials at all? Mike, you're wildin', bruh. That's fair. You just know me. I'm a big partialer. See, now I'm even more content that we did that. That's what we say, right? Low-hanging fruit. We don't need to be too precise. Because if we would have tried to hold for that, boom. Now this is where speed is going to fall in. So anyone that was long, you don't get a chance to do anything. If you weren't taking your partials, if you weren't getting out in a logical area, slams against you. This is textbook seek and destroy, actually. Real textbook. That'd have been a nice turtle soup. Because we're going to look for the sell side now. And then you buy the sell side and go back up into equilibrium of the current high to low, which would be anchored with like a fair value gap right there. But no, we're going to leave. Classic. Saying too many goodbyes, right? Price draws us in. We're content with what we had. Winner, we take it on to the next. One-hander from TP. That's a shame, brother. Sounds like me right there. Let's see what we got tomorrow. As we said, Jackson Hole pretty much every day this week. So the next few days may be interesting. It always causes some uncertainty when you have all the central bank folks, the Fed Reserve together, discussing policy and things like that. We'll just come back at the same time, though. So we'll kind of expect, as we said, we'll expect the mornings to be like this all week. So we'll be a little bit more guarded in entries, demand a little bit more precision. But yeah, we'll be back tomorrow at High Impact News 8:30. So normal day tomorrow. We'll be back here about 9:25. Jeez, that's hideous. Yeah, so we'll be back at 9:25. As you said, we'll expect something like this once again, but we understand how to navigate it, so we should be okay. Okay, everybody. Hope you found it helpful today. Until we meet up again tomorrow morning, have a great afternoon, stay safe, and we will talk tomorrow. Take care, everybody.